All right, hello and welcome to Camel Finance. I'm your boy Camel, and welcome to the week. Of course, it's another short week this week as today is a public holiday in the US, so there's not going to be much change in the charts. I was taking a look at Bitcoin last night, and I did discover the most glaringly obvious pattern that I've ever seen in my life. This is, of course, the Stegosaurus pattern. I really don't know how we missed this, but of course the implications are that we will now start firing off out the top of his skull. So bullish as bullish can get, right? Despite the markets being closed, there are still plenty of things going on. So of course we're closed today for Martin Luther King Day. The retail sales data on Wednesday, I actually kind of expect to be weak because of course the base case is that we are slowly but surely heading towards a recession. So I'm going to be interested to see if that feeds into my base case narrative. We got the manufacturing indexes on Thursday, home sales data Friday. Of course, this is going to be important for me as well because I'm currently short the housing market. And as you can see, price is trading right around break even since I initiated the short. But objectively speaking, we are still being contained by this downward sloping red resistance, and we have got an upward sloping red support line breakdown. So hopefully home sales data can be weak and we can start to see some breakdown. And on Friday, we've also got consumer sentiment and a total of 7 Fed members speaking this week. Not really sure why or what they're hoping to achieve, but it's another short but busy week ahead. Something else I'm looking out for is another one. Okay, are we going to see another one? Are we going to see Bitcoin once again, Dalai Lama its way out of this current formation? We, of course, have had the downside liquidation. We are now looking to put in a Dalai Lama pattern. So I do indeed wonder if this 5-day chart starts to take on the look of the famous Mu pattern and if we are indeed going to Dalai Lama our way out of here. And as of tomorrow, we should get a better idea of how much interest there is in the spot Bitcoin ETFs. They traded for just 2 days last week, of course, and we saw that the ETFs totaled $819 million in inflows in 2 days. So if this keeps up, then you better believe the price is going much higher. BlackRock also released its current holdings at the end of the week, and it has shown that it holds just under $500 million in funds from just 2 days of trading. So again, if anywhere near this level of inflow consistently shows up, then Bitcoin's price is going to break the all-time high very, very shortly. In fact, at this rate, I saw somebody do the maths, and BlackRock will have overtaken MicroStrategy in terms of the number of Bitcoin held by February. Very, very bullish indeed. And keep in mind that we actually saw net inflows of over $1.4 billion in just over 2 days for the ETFs. Now, we did have GBTC with just shy of 600 million outflows. But once this GBTC selling is out the way, right? Once these GBTC clients that have, remember, some of them likely got in a couple of years ago and have been underwater for the best part of 2 years. They've been underwater for the best part of 2 years. This is probably one of those capitulation moves, right? They bought Bitcoin probably because it was too hyped and they didn't do enough research. And they've had to weather massive drawdowns over the last couple of years. And now they can get out somewhere around break even, maybe a little loss, maybe a little profit. And, you know, we've all done it, right? We've all bought an investment, held it down, and then it's come back up and you've been saying to yourself, wow, thank God, I can just exit my market now. I can just exit my position and walk away relatively unscathed, right? So I think that's what's going on. I think they're letting the big boys out. And of course, in the process, they are dampening the effect of the ETF before they let in the big boys. Once these big boys are in position, they will, of course, allow everyone else to step in and bid this thing up. And so just keep in mind, because a lot of people are getting quite frustrated with the ETF, but the ETF is much more of a long-term thing. And at the moment, as it stands, roughly a third of the volume has been sell-side pressure. So just give it time for the sell-in to abide, and we will indeed see higher Bitcoin prices. We also set a record, not just pertaining to ETFs, but pertaining to hash rate as well. We had the largest all-time hash rate at a whopping 716.21 exahashes per second. This is enormous. This is absolutely enormous. And our current hash rate sits at 532 exahashes per second on average. So more and more capital investment keeps showing up. More and more security for the network is provided by these miners. And of course, the underlying value that backs the Bitcoin protocol continues to increase. Look at this, okay? Remember that old adage, hash leads price. And Max Kaiser here has pointed out that the hash adjusted price of Bitcoin now sits at approximately $460,000. Now, I will say this. I went searching far and wide to try to find out how this calculation is produced, how this number is derived, and I could not find it. I could not find it at all. So if anyone knows, if anyone can point me in the direction, I would love to hear it. So please do let me know in the comments below. Whole sentiment seems to be increasingly bearish out here. The RSI on the daily chart has gone below 50. Bitcoin had been bouncing back when the RSI went down below 50 since September 2023. So do you think this time will be different? Let's zoom in and take a look. Here you go, right? Bounce down here leads to higher Bitcoin prices. Bounce down here leads to higher Bitcoin prices. Now we're back here, right? Is this time different, or do we indeed Dalai Lama our way out of here? Not to mention, when we take a look at the 1 month Bollinger Bands, we haven't even seen anything yet in terms of the volatility that's to be expected. And everyone's in panic. Everyone's in panic with this candle, which really all we did was reverse about 3 or 4 days of price action and end up back where we were 3 or 4 days prior. We've also been in a very tight range, haven't we? In fact, let me get my straight line tool. As you can see by my crudely drawn channel, we've not really done anything different, have we? Right? We've not really done anything to be concerned about. We've been trading in a range, fake breakout, back inside the range. Unless we lose this bottom of this support line, unless we lose the bottom of this channel convincingly on a daily closing basis, then we're still range bound, right? We're still between here, and there's nothing really out of the ordinary. And yet, people are in panic, right? People are really, really, really concerned about this move down. People are using the term crash. I've been hearing people say, yeah, well, Bitcoin crashed. Bitcoin did not crash, right? This is not a crash. This is a move back into the range, okay? Looks nothing like a crash. And if you think that's a crash, then believe me, when a proper crash shows up, and it will, at some point it will, you are going to have your mind blown. But the point I'm trying to make here is that we haven't even seen volatility yet. You know, this is not volatility. And you can tell this because of the Bollinger Bands, right? The bull markets do their best to buck you off the trend, and most people will learn where the term hodl came from. So when we click into here, right, look at the gap between this upper blue Bollinger Band here and the lower blue one, which isn't even on the screen, okay? This is what volatility looks like. Now look at where we are today, squeezing, okay? The gap between here and here is obviously nowhere near the gap between here and here. So if you think we're volatile now, believe me, you have seen absolutely nothing. 10, 15, 20k candles are likely to show up once volatility hits its peak. That is a change of $10,000 to $20,000 up or down once we hit peak volatility. So if this few $1,000s back inside of this range is upsetting you, then, you know, do the introspective work, understand what you're going to do ahead of time, write down some notes, okay? Do anything you can to make sure that you don't have a stroke when we actually do get some real volatility show up. And the last thing I wanted to show you is, with people keep talking about this word here. Now, I've said multiple times, I don't like this term, so I'm going to use the term omega candle here. But the point remains that a bunch of people keep talking about this, and as usual, they have no idea what they're talking about. So this omega candle is not happening anytime soon because it is not a 10k candle. Now, I disagree with this, as I just said. At some point, as we get into peak volatility, we are going to see major changes. But this omega candle, when it occurs, will occur when we've stopped tracking the price of a whole Bitcoin and have moved to tracking the price of sat. It will occur after we've reached sat to cent parity. In other words, when 1 Satoshi is equal to 1 cent. And when 1 Satoshi moves from 5 cents to 6 cents in a single day, it might not sound like a big deal, and for most it won't be. At that point, if you had $5,000 worth of sats, it would have increased in value to $6,000. But, behind the scenes, that Bitcoin price for a whole Bitcoin would have just gone from $5 million to $6 million in a single day. That is a $1 million candle in a single day. And this is indeed the omega candle. Not some measly 10k candle, which we will get, as I said, as we start to see volatility expansion. As these Bollinger Bands, let me clean this up so we can be sure, as this blue Bollinger Band starts to widen up here and this one starts to nosedive, right, then we're going to start to see these big candles. But that is not the day that we all dream to see. The day that we all dream to see is once we've achieved that sat parity, we get the move from 5 to 6 cents per sat, and that translates to a $1 million omega candle. So keep your eyes on the prize, right? Zoom out, think longer term, understand what is ahead of us. Chances of this happening this cycle, I'll put at 0.00001% according to this guy, and a 20% chance it happens at the next cycle, 2028, 80% chance it happens during the first cycle post 2030, and a 99% probability it happens before 2040. So will you still be here then? Will you still be a Bitcoiner? Will you still be in the space by 2040? Will you still have the conviction you have, assuming nothing changes? And will you be ready to enjoy the $1 million candle? So with that said, like I said earlier, look, the housing market, not really changed. The dollar's still kind of sideways, isn't it? Now, can we get a push up to 104 before we roll over? Maybe. And the reason I say that is if we take a look at the euro dollar chart, the euro dollar, remember, makes up about 57% of the DXY. Now, we've got, objectively speaking, this will be our first daily cycle here. And then we're looking to get a second one that will take us out to around here, right? Around the 12th of February. So I see kind of two possible outcomes here, right? Either we're about to just come out of here like this, and then into that daily cycle low for the euro dollar and then off. And then, of course, the dollar will do the inverse of this, right? The dollar will soon roll over, then get a little bit of a counter trend bounce, and then make its resumption to the downside. And that, of course, will look just like this, right? So we'll get this rollover, a little bit of a counter trend bounce, and then make the resumption to the downside. That makes perfect sense. The other scenario I could see for the euro dollar is that we kind of have this bear flag situation going on, and that we're about to break down into support before we then resume and continue to the upside. Now, if that were to happen, that tells me that as we break this bear flag to the downside, we're going to break out higher for the dollar. So perhaps this flag here will end up looking like this, and then we can get rejected higher up. So I'm not ruling that out just yet. And of course, there's also a final and third situation where we break down here and then we break down of this support. And if that's the case, then unfortunately, we will have confirmed most probably that right there, this low here, is the 3-year cycle low. This breakout is for real, and that means that there isn't this yellow squiggle left, and we are going to see a dollar bid in the not too distant future. So that's the scenario I put the least probability on. I still hope that we can get this rollover. This rollover would still give us the space to see a blow off top in crypto and the stock market. All of that makes sense to me, but undeniably, if we do get a bear flag breakdown, the dollar is going to get a little pop in the short term. So we need to be prepared for that. But so long as we hold this upward sloping red support line, then I think it's reasonable to continue to expect the dollar to continue its downside move. So one day at a time as always, but something that we should need to keep an eye on is indeed what's going to happen with the euro and the DXY. Bitcoin, of course, as I kind of said earlier, still not really doing anything, right? We're still sideways, still kind of looks like we're putting in one of these consolidation cycles. A lot of you seem to like this when I grabbed this fractal last time and said, I wonder if this is what we're doing. I did this and then I stretched it out a bit so it fitted, and I was actually kind of surprised myself how well this fits. So is this what's coming? I don't know. That's to be determined, but so far, you know, it's the same old, isn't it? Unless we lose this low from back here, then we'll continue to push the longs. Gold seems to have confirmed the cycle for now, so we'll see. But the thing I'm most sort of interested in here for gold is that we've got a weekly cycle and another weekly cycle due. So I think, to be honest, if we're going to continue to do this and not break the all-time high, then probably what's coming is something like this and a breakdown and a rollover, in which case I want to be short from here to here, and then down here we will load up the truck. So consider this an idea. That's kind of what I expect to happen, to be honest. And if we break the all-time high, then we can get long there. But even if we were to break the all-time high in the short term, I'd probably see this as a trap more than anything else, because that weekly cycle is low. We're getting late in the weekly cycle. So interesting time for the metals. I do still think this yellow squiggle of mine is actually going to come to fruition. And last but not least, here's oil. Okay, oil continues to be held down by this downward sloping red resistance line. We've still got the stop choked up, but it kind of, to me, looks heavy. And the reason I say that is even if we redraw this trend line a little bit stricter and we have something like this, if this was a breakout, right, if you were trying to trade this to the long side, would you be confident in what you're seeing here? You know, because I would want to see breakout, retest, strong push off. I'd want to see this. Now, that can certainly happen and it could change in a day. But right now, it's kind of looking like a failed breakout. Let's try again. It's weak. It's weak. It's not, you know what I mean? It's not doing this, is it? It's not looking like a strong breakout. That tells me to continue to expect downside, perhaps to even draw this trend line the way I had it. And, you know, we'll just see. We'll see. So don't believe the news, because that's the number one thing. When people challenge me on this short, they often say things like, yeah, well, what about the war in the Middle East? Or what about the news? And, you know, what about it? Okay, look at the chart. Does this look like something you want to long at the moment? Because for me, it does not. It does not. And so what else is there to say apart from welcome to the week? If you're having a day off, then hope you enjoy it. For everyone else, hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.